Happy Monday, everyone. Good morning. It's 8:01 a.m. Chicago time on Monday, the 18th of September, 2023. Thanks for joining me this morning. This is episode number 2538. We don't have a video for Friday, in case you're wondering. I got several messages saying the video's missing, but I did post on Twitter to say that there's not going to be a video on Friday. It's a bit of a tough morning. Um, Just a reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let's dive into it here. Or maybe not, since this thing doesn't recognize my desktop. Not the one I wanted. All right, so here we go. Cool. Um, So on the convergent trading pre-market summary sheet this morning, I'm not sure why my monitors got messed up like that, but we have a market that's in a mixed sentiment, tilting to the sell side in terms of risk exposure, so risk off. Not much news flow over the weekend. Uh, some bleeps and blurbs here regarding China and the APAC conference in San Francisco is coming up, and so on and so forth, but nothing really major. This morning we got the Canadian PPI, which came out higher than expected. Looking at the numbers, this isn't a big market, global market move or anything, but Canada came out with 1.3% month on month, which is a lot, versus 0.5 expected. The prior is negative 0.1 year on year, negative 0.5. The prior is negative 3.2. So seeing the same kind of pickup in inflation in Canada. For the rest of the day, we have the NAHB housing market index at 10, and we have ECB's Panetta at 11, and then we have a couple of we have a 3-month and 6-month bill auction, and then this evening the net, or this afternoon, net long tick flows. This is the flow of money into and out of the U.S., and so on and so on and so forth. This week actually is a pretty busy week. In terms of releases, the next major release is building permits out of the U.S. tomorrow, and then we do have housing starts, but then we have the FOMC on Wednesday, and that's the big one, September 20th. FOMC rate decision. We do have the inflation rate out of Great Britain that morning as well at 2 a.m. right at the European Treasury Open. And then we have our press conference at 2:30 with the Fed with our friend Jerome Powell. On Thursday to set out the week, again, because it's Monday, we like to see what's ahead for the week. On Thursday, we do get the BOE rate decision. That's at 7 a.m. Eastern. BOE, and then ECB's Lagarde at 10. And then on Friday, we get retail sales out of Great Britain and a couple numbers out of Germany, and then that pretty much wraps up the week for us. So there's a little bit of busyness here to this week, especially with the Fed ahead, and it ends pretty quietly. We do get global manufacturing PMI out of the U.S. On Friday and so on, but that's what's on deck. So we're coming off of expiration and triple witching last week. We're done with the roll. Obviously, expiration's gone, but now we're coming into a week where we have the Fed in the middle of the week. So today is likely to be a relatively uninhibited day, but I would expect tomorrow to be somewhat locked up ahead of the Fed. Okay, so just keep that in mind. Looking at our rotations and ranges right up here, because it's Monday, these have been updated for last week. You could see the rotations have fallen off. We're seeing volatility kind of come out of the market. The S&P is a harmonic first standard deviation of a 1 minute rotation going back 20 sessions for RTH only comes out to 5 points. That's the edge of what we would consider to be a normal rotation. For the Nasdaq, it has dropped to 22 and a quarter. Stayed steady for the Russell, dropped in the Dow. I think it was 35, now it's 31, and then stayed steady in crude. So those are important metrics that you should pay attention to. And then down here on the sheet, also very important, the overnight stats for the S&P. So the S&P, as you can see right here, is at 170,000 contracts, and that's in line with the mode, or the most common volume before the open. For the session, for the overnight session, that's the most common volume over the last 252 overnight sessions. We're right in line with that. The extreme, or the edge of what we would call normal, is at 310,000 contracts. Those are also stats to know. Make sure you know. And then as far as the S&P is concerned, it's in a multi-distribution. It's really a double distribution profile this morning. So we've traded up higher, up into 4507.50. We've fallen back through the century figure 4500 with some single prints, and we have established this balance between about 4497-ish all the way down to 4487. So if you recall last week, 4496 was the target to the downside on a down rotation. We got that on Friday afternoon. But the S&P currently is selling off a little, has sold off a little bit, and is relatively active. It's pretty active overnight price discovery. Hang on, I got to clear my throat. Pretty active overnight discovery, and I expect that to translate into the day session as we open up. Crude popping higher. Crude has rolled to November. If you've rolled your crude to November, you need to adjust all the prior prices to today, down by 75 cents. The crude is trading in contango, whereas the new contract is cheaper than the old contract by 75 cents, which is a lot. That's a lot for crude. So November versus October's prices need to be dropped by 75 cents to align with November and get rid of that 75-cent gap in your charts. But crude is on a tear, continues to be on a tear, continues higher, and that's where that stands. Let's take a look at the overall market. So let's start with the bigger picture as always. Here's your S&P. The S&P, come on, baby. Okay. The S&P did a great job pushing into that. If you recall from last week, we talked quite a bit about 57 to 60 in the new contract, right? So that would be 07 to 10, 2507, 2510 in the September contract, 57 to 60. We have it highlighted here, and we managed to poke through that on Thursday, and then Friday comes along and opens a little bit lower. Thursday was quite the run, kind of unexpected, and then Friday was just a really had a really hard time holding on to these higher prices. So a lot of liquidation on Friday, and we ended up with a multi-distribution profile on Friday, liquidating all the way down and closing at the low end of the range with the point of control at the low end of the range, at least for volume. But for TPOs, the point of control is a little bit higher. This point of control is in line with the MC point of control, 45.15. But this is a pretty weak close on Friday. Remember, we expected to be in this balanced range for the week, and here we are. And overall, it's just it's shaping up given that we opened on Friday, tested up, and then fell off and continued to rotate down and down and down and down and finished near lows, we expect that the auction got interrupted by the close and therefore buyers weren't really found. And so we expect prices to advertise a little bit lower in order to find those buyers. And it was actively doing that in the overnight session. So we're opening in a gap this morning of 44.91 currently. The low being 44.94. We have a small gap underneath, but we are in a bounce range. We have not broken through that bounce low of 44.83.84. So I'm expecting, the expectation given that is an open that responds back into settlement and most likely tries to push and hold into the single prints above. Let's take a look for a moment at how those rotations looked on Friday. If you don't watch rotations, you're missing out, in my opinion. But if we look at Friday's trade, here's the open on Friday right there. And you can see we pushed up, down. Then the B bracket came in and extended A bracket down. Then C bracket came in and extended B bracket down. We ended up with single prints. You can see that the market never came back to retest the initial balance low on Friday. And then I started to see signs, and I pointed this out in the Convergent Mavens channel. I started to see signs that, C bracket extended pretty good. The IB was broken and extended pretty good. D bracket extended C bracket, and then E bracket broke D brackets high, and this is where I said, hey, be careful here, seeing it settling where on top of the MC point of control, the MC point of control. So to me, this looked like it was kind of done, and it sat there for 4 brackets, so 2 hours. And then it finally broke out to the downside, and then from there we left behind another set of single prints right here, very, very small, at 0750, and then we broke through the century figure at 4500 only to basically balance out. So we ended up balancing out and settling on Friday expiration day right around that 4500 level, and we shifted the point of control lower. We have these clear single print areas or low volume node areas. These areas become very important now because they tell us these become high watermarks, so to speak, or tattletales that tell us how well the auction is going. As long as those are intact, sellers are likely to be in control. So any first test of these low volume nodes is expected to see a reaction. So you're going to want to mark down, in my opinion, you're going to want to mark down the 4507 handle and also the 4521 to 20 handle is another area you want to kind of check. So I'm going to be mentioning those quite a bit, especially the 2021 above for the week. As long as we stay below that imbalance here, it looks weak and is very, very likely to push down and take out that swing low that we had at 44.83 or so, right? So down here, 44.83. So this morning, open, responsive, and then expecting it to try to push up. I don't know if we have enough here, if we have pushed far enough down, the low being 44.87 overnight, higher than that 83. But if we've gone deep enough to find sellers, then I'm looking for it to push to the single print at a minimum, and that's only about 14 points away. So I'm expecting this to be responsive. Why am I expecting it to be responsive? I'm fading Friday's move down and selling. Yes, I am. But the reason I'm doing that is because, take a guess, I can't wait for your answer, unfortunately, because we are in balance. We are in balance, and we have pushed to the other side of balance. And so I cannot expect it to just keep flowing. So let's turn that on here. The value area. So this is the value area of balance here. We've gone through it by just a little bit. This shaded area is now the value area of balance. I have it up temporarily. We've gone through that shaded area. My expectation is it's very likely to push back into bounce. We'll see. The secondary scenario is to open, gap to settle, maybe push into the 4,500, fail at the 4,500, and then extend down to the last low. And then from there, we start to look at the bigger picture TPO chart. Bigger picture TPO chart. Again, this area has received a lot of balance, right? So if it starts to break through, then we're looking at 44.50, 44.50 to the downside next as the next key test area if it does break the 83, but I'm not expecting it to. But let's say it does. So this morning I look for a reversion back to settlement and then from there to drop, but that's the secondary scenario. The primary scenario is that we're very likely to bounce a little bit higher today. We'll see how that goes. The NQ is a bit of a different animal here. The NQ is a bit of a different animal. It managed to get to its balanced low and it's remaining in that balanced low. To me, the NQ has a really decent resistance area. You know, the NQ pushed through that key 15,650 area up here and ended up falling below it. So quite bearish. Friday was very clearly bearish. And then, you know, we're holding below this 15,463 area. Let's call it 15,460. This is expected to be a key resistance area 15,460. NQ, pretty important. This is expected to be a resistance area. The NQ is staying on the edge of Friday's profile, but the NQ is on the edge of its overall balance. The NQ looks a lot weaker than the S&P is. So that's what's cooking there. Crude oil, I mean, you know, back adjusted, this thing is just ripping higher and higher and higher. It's just there's no stopping crude right now. We gapped up. We're in an open auction out of range on crude. It continues to me to look technically like it is overextended, but fundamentally it's having a hard time holding on to these lower prices and continues to seek higher. But this morning, I wouldn't, as on a day trade basis on crude, my view is not to press to the long side, kind of cover risk quickly, hold a runner, but most likely that runner is going to come all the way back and get flattened. But crude again has a very wide gap, and that's not because of the roll, that's just an actual gap, and so I don't expect that to get filled, but I'm expecting crude to kind of sit sideways in here and not continue to push higher. Expect crude to come back and revisit this 90 over the next few days, but the news flow is not helping that out. The news flow is such that fundamentally there are moves to constrain supply and to push crude higher. That brings us to 8:20 Chicago time. We'll wrap up here. Again, it's you know, FOMC on Wednesday. That's what's key. That's what's ahead. The market has already knows what the Fed is likely to do. There are no surprises anymore on the table. But so the trade is more technical than it is fundamental currently. But overall, I expect that because we're at the edge of balance on the S&P, I expect us to push back through the 4,500 and seek higher prices, in my opinion. Again, I can't predict the future, but given how things are set up, this is what I'm expecting. I'm expecting this ES to end up pushing right back up into that 45.20 set of singles, middle of the range, filling that in. we'll see what happens. Good luck today. Cut your losses, folks. Don't try to defend any trade. There's not a single trade that deserves your loyalty. Your plan deserves your loyalty. A single trade does not. Think of it this way: it is like giving up a ship to save one sailor who decided to jump overboard. You don't want to do that. You want to cut them loose, take the loss, give them a good funeral and move on, mourn that trade and move on. You don't want to go down with the ship because one trade has dragged you down. Your goal in your career is to take thousands and thousands of trades to sample the market as much as possible. So it makes no sense to hold on to losses beyond what your plan says. Good luck.